All right, let's get started. Hello and welcome to today's UPS webinar. Today's webinar is focused on streamlining US imports in Trans-Pacific trade. If you've been to prior UPS webinars, you might remember a few months ago we had a Europe import focused webinar, and this is sort of the Asia to US spinoff. Very excited to welcome a diverse representation of UPS global freight forwarding products. We've got ocean, air, customs brokerage, and STAS all representing today on the call. Many of our customers work across all of these products when considering their Trans-Pacific trade needs, and we felt it was important to tie it all together this morning by having everyone involved. We do have an underlying theme of how to streamline your imports into the US. There's a lot going on these days, but we found that staying vigilant to the various, if not constant, ups and downs in today's world is an absolute key to success. All right, so before we get to introductions, let me share a quick disclosure. This presentation is for informational purposes only. It does not constitute legal advice. Please consult with your own legal counsel for such advice and do not rely on this information without performing your own research. Okay, let's take a look at what is ahead for today's call. I'll start with some quick introductions so that you know who will be today's speakers. We'll then have a market update from both the air and the ocean freight forwarding markets. We'll then transition to some of our trade compliance experts to take a look at hot topics surrounding the clearance of US imports. Lastly, we've got a great conversation lined up with a UPS partner and customer, which I think is going to really do a good job of bringing it all together and keeping things in perspective. All right, so let's take a look at some introductions. My name is Jeff Perlman. I'm the product marketing manager here for UPS's Ocean Freight Services. I'm joined today by Jackson Carter, Air Product Director, Jason Miller, Director of Ocean Sales and Services, Kelly Wilton, the Cross-Border Trade Compliance Manager, and Levi Sanchez, the Senior Manager of Global Compliance over at STAS. The customer conversation will be led by Paula Rhodes. A little bit more on that later. Today's session is being recorded. The replay will be made available along with any presentation decks and any other links that we feel might be necessary. That will be made available to anybody who registered, and it will be included in a post-webinar email, so keep an eye out for that. We have planned about 45 minutes of content, but we do not plan to have a live Q&A segment. Instead, we have a team of panelists who will assist our speakers in answering your questions via the text. Please use the Q&A feature on the Zoom webinar at the bottom of your menu to submit your questions. If we don't get to your questions live, we will absolutely try our best to make sure that we get in touch with you after the call. All right, so with that behind us, let me hand it over to Jason Miller to kick us off with the ocean market update. Over to you, Jason.
All right, Jeff, thank you very much for the introduction. As Jeff stated, Jason Miller, I am part of the UPS Global Ocean product team. I'm going to spend the next 7 or 8 minutes talking about what do we see specifically Asia into the US, some of the challenges in the US, and then much more importantly, what are some of the potential solutions? This is such a crazy time, right? Everybody on this call more than likely is all about solutions. How do we resolve these challenges? How do we find different ways to move our freight and get it to where we need it to be? Coming out of where we were, the market is just giving us crazy signals, right? It is trying to get us to understand what's happening with the rates. It's sending one message. But then when we look at congestion and intermodal challenges, we get a totally different message. So that's what we're going to talk about. We're going to walk through that, and then we're also going to talk about, hey, what do we see in terms of potential solutions for this? And there will be one thing that we really, really stress, and that is the nature of your communication is going to change with your providers, but it is absolutely every bit as important that you essentially be in communication nonstop, alternative planning, because where we are right now is going to continue to be very, very volatile and very, very challenging. Some good news, right? Port congestion in Asia is improving. A lot of the backlogs out of Shanghai have disappeared. We know they run some of the most productive ports in the world with their 24/7s. However, as it gets into North America, we're a totally different dynamic, right? Everybody's been very focused on the West Coast and what those mean. I know a significant number of the people on this call enacted different supply chain strategies to move things to the East Coast and the West Coast. But what are we finding there? Right? There's actually more vessels parked off the East Coast and the Gulf Coast than there are off the West Coast. So some of the strategies that have put in place have worked, but what we've done is we've simply squeezed that balloon, and now we have challenges in other places. We're going to spend a lot of time talking about what's going on with the rail and what do we see there. And there is some really good news, right? On Friday, there was the Presidential Emergency Board. So there's a 60-day window where the three arbitrators are going to work. They'll have 30 days to put together their proposal. And then the unions and the railways have 30 days to respond. And so we're taking that as great news, right? That's a significant improvement for where we were. We're taking the ILWU, the fact that they're continuing to work and that very little information is being shared is a positive sign. So, there's those positive signs, but then on the ground, what we're finding, right, is that the backlogs are growing. When we talk long dwell containers, those are becoming more and more of a challenge. Unfortunately, in some of these, right, we've met the enemy and the enemy is us, right? How many of us have warehouses that are full to bursting? And unfortunately, you have containers sitting on chassis for multiple days at a time, or you're pushing your recovery from the terminal into the very, very last free day to maximize that. So, equipment challenges are real in the US. Getting chassis, drivers, all of that is a huge, huge challenge. The other thing that we'll see coming for the California ports is AB5. There's some work stoppages or work actions going on in Oakland, but that truly is a potential. We just don't know. I mean, it could be a showstopper, it could be nothing. You're hearing both sides. And then in terms of rate volatility, we'll talk about this next, but really, if you're coming from the Asia main ports into the West Coast, those rates have come down dramatically. But if you're shipping out of Southeast Asia or Taiwan and you're going into the East Coast or the Gulf Coast, those rates have been much, much more stable. The other question is what's going to happen with peak? There is some indication that it may be a later peak and then it'll tail down. So that's a really long way of saying there's just so many mixed signals out there, but we know that there's some ways for us to help work around this. And that's what we're going to focus on next. So when we look at the options here, again, a lot of you guys have already pulled the trigger and you've moved things off the West Coast. But even here, this is because of what the steamship lines are doing with blank sailings. It's absolutely critical that we continue to communicate. So whoever your provider is, you got to be talking to them, because if there's a blank sailing, right? Say you're moving stuff into the Northwest ports and your carrier blanks 4 sailings in a row into Seattle, but they're going into Tacoma. Do you have rates in Tacoma? Do you have an allocation into Tacoma? How do you manage that? So there are alternatives, but you just have got to be communicating and see where it is. One of the positives, though, is the booking window has come down to about 3 weeks. So instead of having to book 4 or 5 weeks out, you now have some additional time for contingency planning and working through that. But continue to stress that to see where we are. Visibility. Visibility does not mean action. So there is a benefit of being able to use the real-time transportation visibility, see where it is. But let's be very, very candid. The options, once your container is offloaded and if it's grounded or in a stack, is really, really difficult to get. Still ask for diversions from the steamship lines. Again, those are typically 4 days before the vessel arrives. So diversions are still an option. Transshipping, over-the-road solutions have to be considered depending upon where you're going. And again, all of that requires constant communication with your provider. This next one, we talk about it an awful lot, and it has to do with, okay, I have enough material for 10 containers, and I'm going to move all 10. What we're really stressing is, look, which ones are the must move, which are the highest priority, and what's my most favorable routing, and be sure those containers get booked first. Force your vendors to be compliant and say, no, I need these POs to ride on this, on this vessel, on this sailing for these reasons. So be very, very strategic in terms of how you're prioritizing your shipments. And the other thing, and this is really difficult to say, right? Because we've always been trained, as a profession to optimize things. So to say, look at multimodal, look at LCL, look at preferred LCL. I know you guys have heard that message before, but based on what we're seeing in the North American supply chain with the intermodal, what's going on in the terminals, you've got to look at it. You've got to consider that as a viable option. And the last one is rate management. I know everybody is starting to gear up and you're planning for your 2023 budgets and trying to understand what's happening here. Where are we? I want to call out a couple things. One is definitely into the West Coast, rates are very volatile. You should be talking to your provider weekly, get a sense of, hey, what's going on? What can we do? What are some of my options? But a couple mitigating factors with that is, again, we are not seeing carriers come off their contract rates at all. So for anybody in the audience who signed a longer term deal, a fixed rate deal, we're seeing the carriers hold firm there. And again, based on the other routings, we're seeing that. So our message again would be real-time communication to find alternatives, especially with the blank sailings coming up and our anticipations are going to increase. Visibility, you got to try to stay in front of it because visibility does not equal action. Prioritize, and continue to work with your providers on how you want to manage your rates. We'll see where that goes. So with that, again, looking forward to your Q&A. We'll provide all of our feedback. And Jackson, if you'll please give us your insights on the international air freight market.
Yeah, absolutely, Jason. Thank you for that update on ocean. I think, not in this slide, but the next slide, when we talk about our air best practices, you'll see some of those common themes that Jason just touched on. But before I get to that, I do want to take a few minutes and give an update on the global air freight market. Some of these insights will go beyond the Transpac rate, which will be the main focus, but I do think it makes sense just to give the picture of what the air freight market looks like overall. So globally, we still see very high demand in relation to market capacity, and this is sustaining rates well above the pre-pandemic norms from several years ago. There are some lanes where this trend is normalizing, but in particular, the Transpacific is still suffering from an overall lack of passenger capacity in the market. Of course, for the remainder of this year, clouding the outlook are certain macroeconomic factors, inflation, energy prices, rising interest rates. And while nobody knows exactly how the market will respond, I am going to talk through some things that we expect to see for the rest of the year. So starting with demand. Demand has grown this year on a year-over-year basis, and we anticipate that will continue for the rest of 2022. Specifically, tonnage is up globally, 3% year-over-year, year-to-date, and we expect that to increase up to 5% by the end of the year. Using 2019 as a pre-pandemic benchmark, tonnage is up 6.7% year-to-date from that time. We anticipate that to grow up to 11% by the end of the year. Drilling down to some geo lanes, we have seen very strong growth in the transatlantic market, and that's 20% year-to-date. Transpacific is much slower. That's forecasted to be 3 to 5% by the end of the year. From a U.S. inbound perspective, we've seen lanes perform very well, driven by the strong U.S. dollar and high levels of consumer spending, although that might be challenged in the following months this year. Moving on to global air capacity. We do expect global air capacity to return to the levels we saw in 2019 by the end of the year. Although one important caveat to that is that there's an increase in freighter percentage versus that time. So we still, again, haven't seen that passenger capacity on some lanes recover back to where it was in 2019. Transatlantic capacity specifically has grown 40% year over year with passenger belly cargo traffic space really driving that trend. We do expect similar new growth out of APAC following the end of the China lockdown, but that will take some additional time as some industries are still recovering. Still speaking on global air capacity, one lane that we've actually seen decrease is Europe to Asia, and that is down 23% year over year due to the war and airspace closures. A side impact of that has been more capacity added Europe to the Middle East as airlines are rerouting flights to avoid Russian airspace. And then lastly on this slide, just to talk about cost. What we're seeing, despite the fact that some capacity is coming back, is the fact that all-in transportation costs are still at historic highs. And there are a variety of reasons for this. I'll just list them quickly. We see demand, at all-time highs, and that demand has so far outpaced the gains in capacity. We've also seen rising energy prices, especially jet fuel, and those are driving our costs upwards. I already mentioned some airspace closures and new routes. Labor shortages, particularly in North America and Europe, are causing ground costs to increase. And then fuel and diesel price increases are pushing ground trucking carrier costs upwards as well. So that wraps up the update on the market. And now I want to move on and discuss some best practices. Again, you'll see some of this stuff echoes what Jason spoke about for ocean. The first I want to touch on is the importance of advanced bookings. And the idea here is that the earlier that your forwarder knows that you'll be tendering air volume, the better. So, on our end as your forwarder, we're in daily contact with our carrier partners, discussing bookings both for freight on hand and also future cargo in our pipeline. So even if it's very early, very preliminary information, the earlier you can give us, any guidance on what you'll be giving, the better we'll be able to lock up capacity. And as I did mention, Transpac space is still tight. And so the earlier we do that, the better. And doing so can only help. It can only increase the chances that your goods move as planned. So the next one I'll touch on is transport optimization. So this is all about picking the right mode of transport and the right service level for your shipments. And this seems incredibly obvious, but it's also incredibly important. So we all know the transit and cost trade-off between air and ocean, and even within these modes, based on the service level you choose, the port of entry, which defines inland trucking, costs can vary greatly. And so what I would say for this bucket is just to make sure that you're communicating, you're collaborating with your forwarder to understand all the options available to you. Make sure you're talking to them about any creative offerings, like sea air or one-to-many delivery models, things of that nature that can really help you optimize your planning. The third best practice is flexible budgeting. So specifically here, what I'm referring to is the ability to quickly secure extra funds when the inevitable emergency occurs. As we've seen over the past 2 years, eventually something will happen and you will have some unanticipated transportation needs. And if you've already had that tough conversation with, whoever's holding the purse string, the easier it will be. One example of this that we've all seen over the past 2 years is, the ocean to air conversion. If you're an ocean customer, obviously one of the last things you want is to have to upgrade to air. But it'll make it easier if you've already, again, had that conversation in advance with your partners at your own company. It'll make that pill a little bit easier to swallow, because when it does happen, you want to be able to move quickly, work with your forwarder to identify and book air options so that you can keep your supply chain moving. And then lastly, this one is a bit unique from the others I've touched on because it is not a quote unquote easy fix, but it is one that's worth mentioning. And that is nearshoring of production. So nearshoring means moving manufacturing closer to your target markets. And what that does is it eases the burden of transportation on finished goods, most of the time, which are under urgent transit requirements. So again, it's not a quick fix, but especially as the cost of transportation rises in relation to holding costs and labor costs, it's making more and more sense for companies. A lot of companies are choosing to nearshore and move production closer to North America. So just something worth mentioning. Again, not a quick fix, but if you do your analysis on your side and it makes sense overall, it is one option that is absolutely worth considering for you. At that point, this will wrap up our air update. Just like Jason said, for air, very much looking forward to your questions in the Q&A and getting those answered. But for now, I will go ahead and hand it over to Kelly for her update.
All right, thank you, Jackson. Appreciate it very much. So yeah, we've just heard about some of the trends and challenges involved in transportation, and of course, some of the solutions or strategies to manage that. But we thought it was very important to ensure we talk about some of the hot topics in trade. So between Levi and myself, we're going to talk about three of the, I guess, most pressing matters that we're seeing out of the Asia region, predominantly China. But yeah, let's jump right into it. Let's start with the Uyghur Forced Labor Prevention Act. Now, some folks like to call it Lucifa, but I can't do that. So I'm going to be calling it the Uyghur Act. And what is it? So this was passed in on June 21st of this year. And what it does is it creates a presumption that all goods from the Xinjiang Uyghur Autonomous Region in China was made with forced labor. Or also, if there are any entities, any businesses that have connections to that region, that their goods are presumed to have been made with forced labor as well. Now, goods made with forced labor are not admitted into the US. So this is where you need to be proactive and be prepared, because you don't want to make all of those arrangements and deal with transportation only to find out your goods are going to be detained, held, or refused. So if we do a diagonal down to the bottom right box, we're going to talk about some of the commodities. Now, the commodities listed are just some examples of goods that are known to be made with forced labor from this region. The list is not exhaustive, right? So it's any goods from that region, but we know these are the critical areas. So we've got cotton and textiles, tomatoes, polysilicon goods. So just know that those are the hot topics, hot commodities, but there are others out there as well that are at risk. So if we go back up to the right side now, what happens to the goods? So if you attempt to enter goods that are suspected to be made with forced labor, then the goods will be refused. There'll be 30 days in which you can export or destroy them, or you can try to submit what's called clear and convincing evidence that forced labor was not used. Now, Customs has attempted to give some guidance as to what that clear and convincing evidence might look like. So they have established some guidance, and Levi's going to share that with us in just a minute. But they, by necessity, had to be quite broad, because as you can imagine, every single good from every single region or single area, they may have different standards, different requirements, different means to prove that forced labor was not used. But they've used broad terms such as supply chain due diligence, supply chain tracing, chain of custody tracking, and just your supply chain management. So in essence, you need to know who the manufacturer was in every step of your supply chain, all the way back in many cases to the raw materials. So even if you're importing a finished good, let's just say a cotton t-shirt, you need to know your supply chain all the way back to where that cotton was grown. And that could become complicated, especially if we're talking about machinery and other equipment. So due to those complexities, that's why I want to turn it over to Levi now, so he can give you some ideas as to how to best manage this proactively instead of waiting until your goods show up and are refused. So Levi, on to you, please.
Absolutely. Thanks, Kelly. Great introduction to, the Uyghur Forced Labor Prevention Act. And the good news is, that we have tons of resources available to help us understand how to navigate, what is a new act, very sensitive to all, human rights, across the globe. So the bad news is they have a ton of resources to manage these stuff. Not many consolidated resources. You can go onto, the U.S. Customs website and find, the list of these resources. They're distributed by the U.S. Department of State, Department of Labor, CBP themselves in many different forms. They even break it down into different sections within here. But you bring up very good points on regarding due diligence, tracing, and management of the overall supply chain, so you can mitigate your risk in terms of being supplied by someone not compliant to the Forced Labor Act. Let's start talking about some of them. Due diligence. Easiest way you can start doing this, mapping of the supply chain. You get the mapping of your supply chain out, you can recognize very clearly where some of those risks areas are in the globe. And if your supply chain travels through those, or some of the material is sourced from those regions. So just a quick mapping will be able to tell you that. Also training your staff, within your organization on what the forced labor risks are for your organization, if not followed, if not, managed, not doing your due diligence. Everybody is a factor in this, that way with the proper training, everybody can see something, they can say something. If they don't know about the regulations or the risks, when they see it, they won't recognize that they see it. So definitely get your staff trained is going to help you do your due diligence as an organization. And then create and manage a code of conduct. Don't think this all has to be on you as the importer in terms of gathering all this information. You may hold the largest part of the liability, but that's because you need to do your due diligence as the importer. So create those codes of conduct. Suppliers, the manufacturers, get them in an agreement how they can provide you or assurances that any of the products that they're supplying or manufacturing for you, they are within the framework of the Forced Labor Prevention Act. Another important one, tracing. Make sure you have all that documented and available should any questions come, whether it be an audit or just a simple check at the border. I would say purchase orders, any of your shipping documentation, make sure not only do you have it available, that it's easily accessible. So when you're asked about that potentially, you have that readily available to provide, and you're not searching or spending days, to obtain that information. And including the documented evidence that any of the products are not mined, produced, or manufactured with any sort of forced labor. And all that constitutes overall the management of of your supply chain and of this evidence. So not, as I mentioned, not just supply chain, but also the evidence that you're collecting that will reassure and confirm that you are not sourcing any of this materials or purchasing any of your products from regions that may be in violation of forced labor laws. Keep evidence of that, that it's not mined, by forced labor. Document your internal controls on how you keep this documentation up to date. It will be super helpful to you should the organization, the importer, ever be questioned on, within this, Prevention Act. You have all that ready available. You have controls to show you're doing your due diligence, you're tracing the overall management to avoid, violations within the Forced Labor Act. So a lot you can do. A lot of it is proactive. Some of it's administrative, but a lot of it is, combined with subject matter experts. It's very difficult with these new regulations to have individuals get caught up to speed on this. So I definitely recommend, if you're a company, to make sure at risk, regions for compliance, just making sure you do have subject matter experts on this topic within there so that you're not playing catch up. You're ahead of it, you're doing your due diligence, and you're ready should questions ever be asked within this. It's a lot just for the forced labor, but Kelly, I know you mentioned we definitely have a couple other areas within the region that are very important to import it into the US, and definitely want to make sure you have time to give us a chance to discuss those as well.
Okay, fantastic. So if we can jump to our next slide, we'll get into our next topic, which is everyone's favorite Section 301 tariffs. So a little bit of a history lesson. Back in 2018, we concluded an investigation under Section 301 of the US Code that allows for the president to assess duties or tariffs against any country that has been determined to have unfair trade practices. And the specific issue with China back in 2018 was involving the misuse or abuse of intellectual property rights. So that turned into a big flurry of duties being assessed on a whole slew of goods. There's currently a lawsuit pending in the Court of International Trade where the plaintiffs, who are importers that have paid the 301 duties, have said that List 3 and List 4A were assessed illegally, contrary to what's allowed under the statute. I can't predict how that is going to resolve itself. It is still ongoing and pending. My crystal ball isn't very clear on that topic right now, but it should be having some resolution or outcome, I would hope, by the end of the year, but we'll see how that one plays out. And you may also recall that there has been a process by which importers can request exclusion from paying the 301 duties if they could demonstrate that these products could not easily be obtained anywhere outside of China. An exclusion was likely granted, so they were allowed to not pay the duties. Most of those have expired. There were some COVID exclusions that have been extended. These are ones for medical equipment, supplies, protective gear that was really needed during the height of the COVID crisis, and is still deemed to be needed. So we're no longer still not paying the 301 duties on those COVID goods. And there were also a handful of exclusions that were recently renewed. They had lapsed for a bit, but now they're back in play that will go through till year end. Other than that, all the other exclusions have expired. So now we're at a crossroads here as what do we do next? Do we continue charging the 301 tariffs, or do we scrap them? What's the plan? So it truly is a bit of a political hot potato right now. We've been hearing out of the White House that it's possible that there may be some exclusions granted for consumer goods that may take a bite out of inflation. But then there are some opponents that saying that this wouldn't be enough, that you really can't impact inflation enough, so don't even bother. But the other interesting piece is there's another 301 investigation happening right now against China, this time involving subsidies by the Chinese government to their manufacturers. So it's possible, politically minded, that they may take this new investigation, roll in the original investigation into it, and use that as a negotiating tool to come up with, what is the protocols moving forward. We need more power to negotiate, so let's use all of the 301 tariffs rolled together. So as you can imagine, it's an ever-changing environment. It is complex, and it really does require you to stay on top of your game in managing these, ensuring that if you can take advantage of an exclusion, you do, but if you have to pay the tariffs, you do. So I'm going to turn it back over to Levi again, who will give us some great tips on how to manage this complex process.
Absolutely. Thanks, Kelly. And it is as complex as it is with really from the tons of moving parts, right? As you mentioned, products coming off list, being added to list, exclusions being reinstated, things of that nature. What's nice about that is, as complex it is, it's straightforward. There's no loopholes, trickerations that we have to consider implementing things of that to stay compliant. It's very straightforward. It all starts with having very accurate classifications, because as you can imagine, your classification being off can have you become, or your products become applicable to up to 25% additional duty. No, I mean, that just doesn't sound good by any nature, 25% addition to something that you weren't expecting. So accurate classification is very key. Know your list. So from your classification, where your product may fall in that list. It's going to help you in all of your planning, right? All of your sourcing, importing, making sure it's worth it if it hits one of those lists with the duties, additional duties up to 25% on top of whatever duties may already be assessed coming into the country. And so it's very important, know your exclusions, know your product, and then know which exclusions were reinstated, which ones were taken away. Again, documentation and a lot of management within the process, albeit administrative, but keeping up to date on it. Maintain a list. I definitely recommend maintaining a list of exclusions that are active with their expiration dates. If you can't build it into one of your applications or systems that will automatically notify you when those are coming due, find a mechanism to trigger, the team that will be responsible for this, for continuously reviewing that, because, as you can imagine, not just import classification for clearance is impacted by this. Many, at least in the US, many import programs can be directly affected by a change in classification based on the 301 process. We never want to classify to a duty rate. That's why accurate classifications are very important, because these change, as we've seen more often, the exclusions, that is, they change more often than we would like. And we need to be able to pivot as an importer very quickly to understand, where our exclusions are so that we don't pay more duty than we have to. But most importantly, we pay the proper amount of duty at the time of importation as not, as to mitigate the scrutiny from customs coming through. So albeit very complex, it can be very straightforward, and it's a lot of management of your data and just making sure you have the right triggering mechanisms to update you when expiration dates are coming due so that you can pivot very quickly and your organization either doesn't waste money or doesn't have to write a big check in the near future when you realized you've shorted customs potentially on some duties based on the 301 program. And that's what I would recommend, Kelly, for the 301 process.
Okay, good stuff, Levi. Thank you. And on to our final topic, which is an oldie but a goodie, right? So we've all been dealing with anti-dumping duties and countervailing duties for years, decades even. But we've noticed a new trend, which is sometimes you may have to pay your anti-dumping or countervailing duties on a component of a finished good. So best way to describe that is through an example. So let's assume for a moment you are going to import lawnmowers from Mexico. So these were assembled in Mexico, so country of origin is Mexico, and you would think, great, there is no anti-dumping or countervailing duty cases against Mexican lawnmowers. However, there is an anti-dumping and countervailing duty case against certain small engines, so vertical shaft engines, under a certain size, whether mounted or not mounted. That's where it gets key here. So if the engine is mounted already on the lawnmower, or if it's mounted on a snow thrower or a leaf blower, this engine is still subject to the anti-dumping and countervailing duties. So even though your lawnmower or other equipment is not, we have to break out the value of the engine, the Chinese engine, because these cases are against Chinese engines, have to break out the value of those engines and pay the anti-dumping and countervailing duties against that value. So it becomes quite complex. There are other cases like that. So it's very important that you understand the total scope definition of the case. The scope definition will tell you what is in scope and what is out of scope of the case. Not necessarily subject to a particular HTS number. So again, if you're importing a lawnmower, which has its own HTS number, you would never know that its engine has a case. So it's kind of key to really be aware of these new cases that are coming out that are like these engines, mounted or not. And there are other products like solar products, for example. If your finished good contains a solar component or a solar product as a component, we have to declare that. So again, another complicated matter that just trying to make life a bit more complicated for us. And luckily we have Levi here to help talk us through that. So for the last time, Levi, over to you.
Perfect. Great segue into, oh no, wait, I've already said, we got to document everything, that within our supply chain, do your due diligence. And that's exactly with ADD, CVD. But my top recommendation is maintain a database of all your non-reimbursement certificates. Those are the key. Those are required for importation. That is letting customs know at the time of importation, you are certifying that these products, they're not part of dumping, they're not part of countervailing, initiatives by any foreign government and selling into the U.S. and maintaining those, especially for your brokers. A database of that so that your brokers have that at time of entry and they don't always have to ask for it, right? If they have to go ask, that is just time sitting at the border. And nobody wants that. We got to keep that supply chain moving. We definitely understand that. So maintain that database. What's nice is you don't have to only rely on yourself to do that. You can, Customs does maintain a database on their site, but at the same time I say that, it's not always reliable. Just imagine where you have your database of the non-reimbursement statements for yourself, just for your company. Now expand that, and that's the database Customs is keeping. So that's a lot of data to manage, to always have available and easily accessible by the public, but it is there on CBP's site. So you can do that. I recommend maintaining your own database for that. And another nice feature is feature of the program now is you can submit your non-reimbursement statements right through ACE. So when you get those, in the past, we've always had to keep hard copies, soft copies, whichever strategy your organization used. worst, you know, to me, obviously hard copies, you got big cabinets full of documentation that you always got to pull, make a copy and send to the broker. But it's got, obviously, as technology has gone up, but even more so, you can put them in ACE. You can, you know, assess it to a specific product. You can assess the, you know, to a specific manufacturer right there in ACE, and those can always be utilized as well for the shipments. So that's the biggest one. Know your country of origin, because that's driving whether your product fits within the scope of the ADD CVD case in question. And knowing that is very important, because knowing the substantial transformation rules may, you know, require your product be part of a specific ADD CVD case. But if, you know, you follow the rules of substantial transformation, you may come out that the country of origin doesn't fit in any case, whether it's the manufacturer or country. So those are the big areas that I would concentrate on, keeping a database of your ADD CVD cases that your products are within scope, and then always ensuring that you understand your country of origin rules and of determination. And with that, I think, Jeff, hopefully you have some closing remarks for us. So, you know, it wakes everybody up after talking about these fun import processes.
Excellent. Thank you, Levi. Really great information from all four of you. So really appreciate those updates. We have one final segment here. Before I introduce it, I'll just make one final push here. We've got about 5-6 minutes left of the webinar. If you have any questions, make sure you're dropping things into the Q&A function, please. All right, so our final segment today is a voice of the customer starring Mary McNally. She is the Senior Director of Global Logistics and Supply Chain Network Design for Crocs and Hey Dude. She's joined by Paula Rotes, the Managing Director of Enterprise Accounts over here for UPS. Unfortunately, they couldn't be here today due to some overpacked schedules, but thanks to the novelty of the remote world that we now live in, we were able to record their session on Friday, just a couple days ago last week. So they hit on a number of great topics ranging from best practices, biggest challenges, value of partnership, etc. Really great session. We're going to go ahead and play that now. I'll jump on in a few minutes and close out the call. So hope you enjoy.
Hey, Mary, I'm so glad we've actually taken a breath from all of our busy schedules to catch up here today. So I do thank you for your time. And boy, we've been hit with a lot in, you know, for the last year now too. And there's still even more to go in 2022. So I thank you for joining. And I just would love it if you give us your insights and some impressions on what additional challenges were made for 2022 with ILWU and some of these other things that seem to be perpetuating that in our industry.
And Paula, thank you for having me today. I think the biggest thing is to say, you know, the new normal is that it's a volatile industry. So whether it's China's zero COVID tolerance policy or the American economy and the consumer behavior and what's going to happen there, ILWU, rail capacity, chassis, the list goes on, right? So the point is to say there isn't one thing. It's actually about the mentality to be able to make sure you and your team are constantly, you know, adapting and being flexible to the reality of the market and the industry and creating new solutions. And by the way, this isn't just for the rest of the year, right? This is our new normal.
Right. And absolutely with that, we learn a lot through challenges and adversities, right? So there's always some bright spots. And I think you kind of hit on a few of those with adaptability, et cetera. Are there anything else that you identify that has gone well that we seem to be continuing to leverage or that is now becoming part of our nomenclature and our habits?
You know, for Crocs, our biggest thing is strategy, and specifically strategy around partner relationships. That is the cornerstone to our success. You know, I think a good example of that is right now, people who are maybe being non-strategic or being short-sighted about partnership and partnership strategy are looking at the spot market and saying, hey, I might be able to save some money if I don't honor my contracts and end up writing something on the spot market. Well, that's an incredibly short-sighted way to think about partnerships and allocation management. You know, so don't be short-sighted and make sure you acknowledge the fact that when the spot market was higher than your contract, you didn't go and ask your partners to charge you higher rates, right? So it's a two-way street, and being thoughtful and thinking long-term in terms of partnership is going to be really critical. And that's helped us for the last few years, and it is going to continue to be a key thing of how we show up in the market and the industry. And I think communication and partnership and your strategic alignment is really important to slow down, whether you're talking ocean, air, parcel, truckload, anything, to slow down and ask your partner, what are their financial goals? What are their strategies? How do they classify customers strategically? Are you an internally classified as cost chasing, and is that the image that you want your brand to be going after? Or are you a key strategic partner on their end as well? So be aware of how you show up on their customer list and if you fit into their business strategy plan or not.
No, absolutely. And I think you hit on a couple of key things, is that we all tend to default to price because that rules the roost. But there's a lot of things that are going on with information and freight flow and the perception that's left, and the ability, right, to leverage multi-facets within that supply chain, et cetera. So without a doubt for that. So as a path going forward, then, any suggestions, best practices? I know you talked about people and being nimble. Anything else that seems to be on your radar that might be something new that is going to become part of our new culture, if you will, as a supply chain managers and providers?
I really continue to hone in on, like, anybody who's ever heard me on any platform knows they always bring this back to people, because in the industry, we can evolve our tools so that transactional things are taken out of people's hands and the systems are doing it. We can evolve and create new technology for better visibility or reporting, but we are still a people-driven industry. So I really do believe people and talent management is critical. No matter what level you're in the industry, you need to kind of keep that in the back of your mind, that nobody shows up to work thinking, how do I make somebody's life hell today, right? Everybody's showing up, trying to do the right thing and do the right thing to make their job and themselves better than they were yesterday. So it's incredibly important to remember that. And I think one of the biggest things at Crocs and Hey Dude is that on our own team, this is one thing we're constantly challenging ourselves, is how do we be an employer of choice? And with our partners, we're challenging ourselves of how do we be a partner of choice? How do I make sure that the people who are managing my account, even with my partners, see that they have career development and career opportunities by supporting us? And that's really, really important to me. And, we will always be a people and relationships driven industry. And I think we have to continue to keep that in mind. I think the second thing I would say about thinking forward and best practices is, and this is true for, I think, leaders or individual contributors at any level in the industry, is continue to be a disruptor, continue to challenge, don't accept status quo, because I don't think, just as nobody's walking in saying, how do I make somebody's life miserable today? Nobody's sitting around and saying, supply chain is perfect and we can't make anything better than it already is right now, right? We all can make the industry a better place than what we inherited, essentially. We can evolve it, we can make it something different, but it takes work and it takes voices and it takes challenging things and it takes slowing down to understand puts and takes and relationships and ebbs and flows. But I think being a voice constantly of asking why and how it can be better and how we can evolve it is really important. And showing up in the industry, the way you want the industry to be. I think that's incredibly important. And that's what we try to do at Crocs too.
No, absolutely. And I can't echo enough, right? That positive tension from both sides. It's meant to be productive and to move us all forward and be stronger for that. And that takes transparency and collaboration. And people aren't always used to that moving forward. And that is something we behaviorally have to change. And it's refreshing for customers like yourself in the marketplace to be able to embrace it and to show the way and be a leader in that. So I thank you so much for your time today, your insights, reconfirming that we're all still in this together. We still got a long way to go. So thank you so much. I hope you have a wonderful rest of your day.
Thank you.
Excellent. All right. While we transition back to the deck, thank you for being here. Really great call. I hope that was valuable. We really encourage you to continue the conversation. On one of our slides, we did list Ocean Freight 1 at ups.com. The number 1 not spelled out. So Ocean Freight 1 at ups.com. That is absolutely a resource. It doesn't have to just be for ocean. We'll certainly route it to the right place if you have any questions or just need to get in touch with us about anything. Reminder, in a day or two, you'll receive a post-webinar follow-up email with today's presentation. And that will also include, I believe, any additional links or anything that we think might be relevant to today's conversation. So with that, really do appreciate your time. Always a pleasure to host you. And we do look forward to doing it again soon. Thanks. Bye.